Welcome back to Finance in Motion. My name is Adamo, your personal financial planner, and as always, my goal is to help build your wealth and help you sleep well at night. In this video, I'll be speaking about the choice of financial advice. So we hear in the market today, in the industry today, that there's a lot of different choices for choosing your advice. So I called this video, Why Choose a Financial Planner? So as you'll know, I'm a financial planner, so I'm a little bit biased towards the idea of choosing a financial planner. The point of this video is to show you that there's different options for financial advice, and I'll make the case for why I think a financial planner is the ideal choice, and that is essentially why I became one as such, okay? So, as always, my videos are set up as issues, action, and results. In the issues section, the question I ask is, who do I choose for financial advice? So I hear there's many different options out there as a client and as an individual. What are my choices currently? And I'll go through them individually. So some of the choices are a bank advisor. So we can essentially walk into our local bank as traditionally known, and we can sit down with a bank or financial advisor. There's always the robo-advisor, which is kind of new to the industry. Last few years has become more and more important in the industry. There's a stockbroker. Some of you will have parents who have or have had a stockbroker. There's a financial security advisor, which is more on the insurance side. So someone who will offer investments and insurance, but always through the aspect of an insurance advisor. And then last but not least, the financial planner. So there are no bad choices in choosing one of these. The issue is which one suits you and which one fits with your goals that you're trying to achieve, okay? So in choosing from one of these, I put some items to consider in the overall decision-making process for you. So the scope of the advice. So do I want someone who's gonna focus just on insurance or just on investments? Or do I want somebody who's gonna look at the larger picture or look at my situation from a 360-degree perspective? So on that point, a bank advisor will typically be able to look at the general situation in your financial life. However, they will not be able to talk about insurance. And from the investment perspective, they usually will only be able to offer bank products. So they are not going to be brokers in the products they offer in the RSPs, tax-free, mortgages, so on and so forth. So a little bit limited here. The robo-advisor is essentially a little bit more of doing it yourself. So the scope of the advice will only be about investments, okay? In terms of stockbroker, again, we're only looking at the scope of the advice for now. A stockbroker, they will usually, again, focus mostly on the investments. However, they will have teams of financial planners or tax specialists that will be able to help you with other elements in your financial life. But typically, they will most likely, their day-to-day job is trading and investing. Financial security advisor, they will look at the investments and they will also be able to look at the insurance side of your personal financial situation because they have the insurance license as well. A financial planner, again, the case for why I would use a financial planner and why I became one is that a financial planner can look at your life in a 360-degree fashion. So there's 6 situations in your life that a financial planner will look at. I will go through that in the next part of the video. But the key is that they will look at every aspect of your financial life, no matter what part of your life you're at. So just starting out, saving, looking to buy a home, headed towards retirement, in retirement, all the way up to your wishes at death, okay? So the financial planner has the broadest scope of advice. Amounts to invest. So we took care of this one. So now amounts to invest. So what do I mean by that? If I have $10,000 versus $100,000, does it matter in the choice that I'll make in my financial advice? So as a bank advisor, there is no minimum. So we can go sit down with a financial advisor at the bank, excuse me, and choose to work with the one that fits in our current situation. Robo-advisor, for some programs there are minimums, but by and large you can invest a monthly amount, you can invest an initial amount of whatever capital you have. But again, like I mentioned here, you're managing the money on your own, and it's really just the investment component. Stockbroker typically will have minimums, and they are getting higher. So if you walk into you try to speak to a stockbroker at the bank as a referral from your advisor at the bank, if you have $50,000, typically that will not cut it to be able to sit down with a stockbroker. They have higher and higher minimums. So these are individually selected minimums based on each bank, okay? Financial security advisor, typically they will not have any minimums unless they set them themselves in their own practices. And a financial planner, again, typically will not have any minimums, but I myself, as an example, I will not have any minimums if it's a referral or someone who is saving a lot of money monthly. But for initial amounts of transfers or contributions, my minimum is $150,000. But again, like I said, if it's a referral or someone who is really eager or willing to work on a plan together, usually I'll be able to waive those minimums. Why are minimums a factor in the investment world? It's simply because of time. So if you want to give great quality and great service to all our clients, time is limited, and it's a matter of being able to allocate that time to the clients that we have. Okay? So that's point number 2. Education level. So for me, this is really, really important because as you know, in my videos, I always talk about being a lifelong learner, okay? So for me, that's something that I've adopted. So a typical bank advisor usually will, they'll have good knowledge for the basics, okay, to start you out. But unless they have many, many years of experience, the education level will be limited in terms of, you know, retirement planning and estate planning and tax planning, insurance planning, which they can do. So it'll help you in the beginning, so it's a great starting point, but eventually you need to graduate as you're growing in your financial life, okay? Robo-advisor, so the education level there, it's basically your own education level because you're managing your investments unless you have the robo-advisor create a portfolio for you and then you let it go. Unfortunately, there's not much input you can have except on the risk, you know, aggressive, balanced, or conservative as an example, but it's really you're managing your own money. Education level for a stockbroker, typically this can vary. Most stockbrokers will be really, really educated in trading and investments, but their personal education level will be a factor of their decision to grow again and get more licenses and degrees. Okay, you have some stockbrokers that are portfolio managers, you have some that are financial planners, and you have some that just are traders. Okay, so broad spectrum of education. It's really a case-by-case basis. The financial planner, so I'll speak to that one. The financial planner is, so I skipped over the financial security advisor because that one is very, very similar to the bank advisor, except that they will have the insurance license as well. And again, just like the stockbroker, they can add more licenses and more education by their own desires, okay? So going back to the financial planner, so here, to become a financial planner, you need essentially to have a university degree today. You need to have at least 2 years work experience in the financial field. And then you have to do a set of courses. It's about 10 extra post-bachelor's degree courses, which are master's level, and then pass an exam that's done province-wide and make sure that you pass that exam. So a financial planner has very high criteria to attain or achieve that license. And then to be able to keep that license, every 2 years we have to do a large amount of CE credits or course achievements to be able to retain our financial planning designation, okay? So I always refer to this as, I compare it to the accounting field. So as a CPA, most clients will know what a CPA is or a CA was before it became a CPA. Well, this is the personal financial services equivalent to that, okay? The process. So what are each of these processes in how they work? So a bank advisor will follow the processes of the bank. The downside of the bank advisor, and I was one in my past life to be able to graduate to becoming a financial planner, is that subject to change. So as the bank changes, as the bank moves you to another branch, you have to go along with it. And sometimes that is at the expense of the relationships you have with your clients. So I'm sure most of you have had a bank advisor leave or change branch or go off to another role. And unfortunately, you're left with someone new and have to repeat your story. So the process here is really at the mercy of the bank. The robo-advisor, their process is very simple and usually easy to onboard. The downside of a robo-advisor, I would say personally, is the client experience or client services after you've been onboarded or transferred your money. So it's hard to reach a human being, it's hard to get advice. So again, because you're not necessarily dealing with your individual advisor. A stockbroker, unless you have a high amount of capital invested with a stockbroker, typically the advice or the process you'll have in the client service part of it will be left to be desired, okay? So clients who have a lot of money with the stockbroker will usually have a great experience, and they'll be the first ones that the stockbroker calls to make any changes, to invite to events and so on and so forth. But if you're at the bottom end with the stockbroker in terms of amount invested, the process is usually typically not the greatest, because it's again a question of time. A stockbroker will have to focus on their wealthiest clients, which is a normal situation if you look at clients versus time versus service. Okay. The financial security advisor, again, typically will work for him or herself, or work for a cabinet such as the Sun Lifes of the world. So their process will be the process they decide to have. So from onboarding you as a client to client services thereafter. So this is really based on a case-by-case basis. If you find a really good one that works well, stick to that person. But again, this is really an individual or case-by-case basis in terms of their processes. The financial planner, so again, I can speak for myself. It's the process to onboard a client, the process to manage a client, the process to update clients, the process to manage any changes, or the client services part of our practice is all centered around being at the highest level in terms of service. So being quick, being present, being available. That's really, really important for us as financial planners in our firm. Okay, so the more systems you have in your process, the easier it is to manage clients, and the better experience you will have. So pros and cons. So I kind of touched upon some of the pros and cons. I'll go over one pro and one con of each. So the bank advisor, the pro is that you can walk into your bank and work with an advisor no matter where you're at in your life. The con is that the bank advisor often changes to another branch or changes role, and they are forced to offer only the products of that particular bank. Okay. The robo-advisor, it's a do-it-yourself model. So unless you're interested or knowledgeable on the markets, it's really a do-it-yourself system. So the pro is that the fees are usually cheaper. Okay. But again, in life, we get what we pay for. If you want advice, holistic advice, just like we're dealing with the coronavirus and market fluctuations, if you want a human there to help you, well, you have to pay a little bit more in the fees. And again, if you can manage it on your own, then you can go with a robo-advisor, or you can do a bit of both. Have some money with a human advisor or planner, and some money with a robo-advisor. A stockbroker, one of the pros is that they usually will be very, very knowledgeable in the markets and on investing. The downside is that their time is limited and their focus is on the higher net worth clients that they have. And if they do work for a bank as a stockbroker, they are forced to go find wealthier and wealthier clients because of the way they're paid. So not that they want to do that, but they have to based on their pay grid. So they will typically not be able to manage clients, between 150 and 250. Those clients will not be served well with a stockbroker. Okay. Financial securities advisor, the pro is that not only can they look at your investments, they can also look at your insurance coverages. They can look at some retirement planning and a bit of a broader spectrum. But I would say they're a little bit more broader than a bank advisor, but less than a financial planner. The con of a financial securities advisor is that they will usually focus on insurance as their first foot. Okay, because they are able to offer investments via the insurance license. So they will usually offer you more insurance-based products. Okay? Again, I'm generalizing. Some offer other types of products, but by and large, that's what we see. Okay? Last but not least, the financial planner. The pro of a financial planner is a high education level and a broad 360-degree view of your financial life, no matter where you're at. The downside of a financial planner, I would say, is limited time as well. So if we do have a certain amount of clients, it is difficult to onboard clients depending on how their practice is run. So the more systems and efficiencies you have, the easier it is to onboard more clients. Another downside of financial planning, I would say, is how we get paid. Okay, so full transparency, financial planners are the only designation on the list that can either charge clients an hourly rate or get paid via the products clients will choose: insurance, mortgages, investments, so on and so forth. So that is a discussion to have with your financial planner. Okay? Last but not least, the fees. Okay, so very, very important to talk about the fees with an advisor that you choose. The bank advisor, traditionally we always thought that there's no fees at the bank when we talk about investments. That is obviously incorrect, and legally you must see your fees on every December 31st statement. One of the last pages will show you the fees that you pay on your investments. Okay, that's besides your account fees and all the other fees the banks charge you. So there are fees at the bank, and they are typically average fees. Okay. Some of the banks are moving towards reducing those fees, but again, you have to have a certain amount of capital with them or go on the route of the do-it-yourselfer. The robo-advisor has typically the lowest fees on investments. Why? Because you're doing it yourself, or it's a set it and forget it model and you don't have a human that works with you. The stockbroker has a fee structure that's based on the capital that's invested. So the more money you have with a stockbroker, the more they're able to reduce their fees. The only downside I've seen with stockbrokers is that the bank statements don't typically show all of the embedded fees. So the fund fees, the trading fees, the admin fees, taxes. So it is sometimes difficult to see what the all-in fee is with your stockbroker. Okay, so if you do have a stockbroker that manages your money, be sure to know your all-in fee on paper. Okay? Financial security advisor, again, I'm generalizing. The fees on the investment side, when it comes to the insurance-based investment products in your RSP or tax-free savings account, those are called segregated funds. They typically will have the highest fees in the market. Okay? So they are able to lower those fees, but you have to have more money invested with them. Financial planner, if you're running your own practice, you're able to offer any type of fee that you want. You're able to reduce your fee as desired. More often than not, the fee to manage clients' money is 1%. Okay? And we're able to reduce that as clients have more and more investments with our firm. Okay? But highly flexible in terms of the discussion of fees. Okay? So that's the initial considerations on how to choose from the list. In the next part of the video, I'll show you the actions in choosing a financial planner, which is pertinent to this video.